Hey everyone, welcome. Hey C Fazio, good to see you. Hope everyone had a great weekend and an even better Monday so far. We got bullishness in the market. So Friday, unfortunately, I was just completely out of it. I really needed a day for recovery. So thank you for bearing with me and missing on Friday. But we got exactly what we were looking for on Friday, which was that confirmation bar. We had a green bar with the close both above the EMA 8 and the high of Thursday. And that set us up for bullishness, for us to be confident that the market could continue its bullish upward movement. And today we got that. We got a gap up and then we traded higher, we traded lower, we ended up somewhere in between. But in any case, it is bullish. We're up 0.28%, not a huge amount, but still that it continued that bounce that we had on Friday. And we can probably expect for it to continue unless something really crazy happens. I know a lot of people are starting to get a little jittery about the government shutdown potential. Uh, in my opinion, there's not too much to be worried about at this moment in time. I have, in my entire professional career, the government has only been shut down once. So they do everything they can to avoid actual government shutdown. And then if it shuts down, it just depends on how long it shuts down for. Is it a day, a week, 2 weeks, a month? The longer it drags on, the worse it is, right? If it's only a couple of days, it's not going to have a terrible impact. But the one piece of interesting news that I saw was that the the Bureau of Labor Statistics, or was it BLS, whoever puts out the employment situation report, decided not to actually release it this week because of the potential for shutdown, which I thought was a little weird because I don't really see why that has anything to do with anything other than maybe will affect the numbers for the next round of data, which would be in 1 month. But I don't really know why they would not release the data uh, on Friday. I guess they're saying if we shut down while the government shut down, and then we can't release the data. But I don't know why they would announce ahead of time, not knowing that they might be shut down, and saying that, well, what if you're not shut down? You're still not going to release the. It's just a really strange announcement to have. So so far, we're not seeing any real jitters or real volatility in the markets. Normally, if this market was very concerned about a potential shutdown, then you would see volatility spiking up here. And we're not seeing that. It's just very steady, just moving back and forth. So I'm not too concerned about an, a shutdown, a government shutdown just yet. And I won't be until October 2nd. October 1st is their deadline to kind of get something done. And then October 2nd would be like, oh, okay, either we did or we didn't. So I wouldn't be too concerned about that just yet. Hey, James. Hey, John. Hey, you too, John. Have a great evening. Hey, Lise, good to see you. So what I thought we'd do today is we'd do a little bit of opportunity hunting. So we just got done going through all the steps to a complete trading plan. I gave an example of a complete trading plan. I thought I would do it again from the very beginning to the very end with a lot of attention to detail. And that way you have at least another solid example before I moved on and I looked at any other questions that I have collected from people who have sent them in to me. So in that process, we'll get a good idea of preparing ourselves for the week ahead and also all the forces that are in the markets, because that is part of my process, my entire process of developing the trade idea. So first thing we already sort of did is, and maybe slightly out of order, we already took a look at the SPY and how it's doing. So before, let's just backtrack. Let's go and look at bonds real fast. Bonds are looking good. This is a breakout of the MA200, pull back to the EMA20, consolidation for a week, and then looks like it's starting to break out, fill this gap, and potential. This is looking bullish for bonds. Bullish for bonds means lower rates in the longer term. That is bullish for equities. So TLT is so far looking like it's a green light. Looking like things are looking pretty good for them. And then I'm going to look at the US dollar. Can I give general market thoughts going into Q4 now? Some expectations maybe. That's a great question, Keenum. And I don't want to front run myself because tomorrow there is a roundtable. I'm going to be there. Jack Carter's going to be there. Alex Reed is going to be there. Jeffrey Turnmeyer is going to be there. I think that's it. There might be one or two other guys, but we're having a roundtable and we're all going to give you exactly that. Our views going into quarter four, how to play them, what's going to look, strengths and weaknesses that we're seeing, and we're each going to give a trade idea associated with those viewpoints. So join the roundtable tomorrow. I wish I had a link. Maybe I do. Let's see. Give me a moment here. Yeah. Okay. Here we go. So if you look in the chat, there's a link right there. Tomorrow, we're going to do exactly what you asked for, a quarter four roundtable. Okay. Hey, Kay. Hey, John. So, and then you'll get a little bit of a preview of that right now as we go through the overall markets. So US dollar is still kind of chopping sideways. It is looking a little bit better, we don't want it to get too strong. That would would make it difficult for trade with the US dollar. And so not only between the US and other countries, but for to also trade amongst other countries on dollar denominated assets, like a lot of commodities, like oil, like gold. So there's a balance that we need to strike. And right now, chopping sideways, it's fine because we already know what that is. We already know what to expect. So basically, we're saying that's probably not going to have much of an impact on the market right now, or at least in the near term, in the next week. So we don't have to care too much about that. Usually closely related to the US dollar is crude oil, and it's doing the same thing. So we don't really have to look at or worry about that. If crude oil starts spiking, then we're going to start having recessionary fears. But right now it's pretty steady. And what I mean by spiking is, I drew this channel. I don't even know when I drew this channel, but I drew this channel. But if we break above that channel, then we'll start to worry about inflationary fears. But right now, recessionary fears. So right now we don't really need to think or worry about that. I'm going to take a quick look at some commodities. Commodities mostly chopping sideways. Looks like they are going up a little bit. That could start to create some inflation fears if this is actual uptrend, but it needs to break out of this area first. Okay, so we bounced back off of it on today. But if it breaks above that, then we need to start to be a little bit careful. DBA is chopping sideways, looking just fine. Okay, then I'll look at gold. Gold is very bullish. Silver, very bullish. Looks overheated. Might need to pull back. I actually took some profits on silver today just because that's so parabolic. So I'm waiting. I'm still very bullish on it. Just waiting for a pullback for a better entry. And then we can start looking at things in gold ratios. So TLT divided by GLD. Okay, so gold outperforming that. SPY divided by GLD. Gold outperforming SPY. And we just bounced, so that's not too surprising. So we shouldn't see this break further. It should come back up unless gold goes crazy or SPY breaks back down again. So I'm going to expect that to stabilize. And then I want to see the gold silver ratio. So silver really catching up. Okay, so that is bullish on the metals market. And some people would say potentially recessionary, but that's further down the road, 1 or 2 years look ahead, so not in the immediate future. And then I want to see copper, except I can't remember copper right now. What is copper? Copper. I guess I could use directly copper. Okay, so we could futures or yeah, XCU USD. I can use that. So let's take a look at SPY copper. And copper starting to come up, and gold copper. Okay, so gold was increasing on copper. Now it looks like it might be in a consolidation. So a little bit steady. Okay. So gold and copper. Copper is very industrial metal. Gold is very kind of not industrial metal. It's just for most people, just have it around just to save it, or jewelry. And so that if this starts spiking up and running, then that is an indication of recessionary fears. And we kind of curtailed that. It looked a lot like that in July, but that was because of tariffs. So it's a little distorted right here. And what's important right here is that it didn't really run wild. It just kind of went up, and then now it's chopping sideways. Okay. So now I have a kind of a good idea of the overall markets. Most things are kind of neutral. The macroeconomic indicators are kind of neutral, but we are bullish in the bonds. We are bullish in the overall markets. I can start comparing SPY. It's looking like a bounce right there. QQQ, nice little bounce right there. Dow Jones, a nice steady uptrend right there. IWM, a little bounce right there. Also pulled back to the EMA 8. So slightly weaker than, maybe not slight, well, definitely weaker than QQQ and SPY. And so for a true bull market, we'd really want to see that start gaining strength relative to those two. And then we can look at our RSP. RSP, nice little bounce bullish. Looks like we need to break above some horizontal resistance here though. And then QQQE. Bullish, so making an all-time high today. So that's good. So QQQ is starting to broaden. We have bullishness in both in SPY and QQQ. So overall, we should be pretty good, feeling pretty good about the bullish direction. So now that I know that, means I want to probably look for a bullish opportunity. And unless I need to balance out my portfolio, but I'm going to assume right now your portfolio is empty, that you're in all cash, or maybe you just have one or two positions that are long because you did a starter position on Friday. Or, well, for me, on a lot of my services, we actually took profits today, actually, because of the little 2-day bounce right there. We can get a little bit better entry in some other opportunities. So it's a good time to look for bulls, and your portfolio is either neutral or very close to neutral. So it's a great time to just look for bulls. I'm not going to bother looking at the bearish side today. So if I'm going to look in the bullish side, I need to start looking at sectors. What sectors am I going to be interested in? So for me, there's a few ways of doing that, but lately I've been using this one because a couple weeks ago or maybe a month ago, I finished programming this, and it's a quick and easy way for me to really look and get a good idea. So if I look over here, there's a couple ways that I can look at this. Either I can look for up and coming sectors that look like they're starting to make a move, or I can look for proven sectors that have shown up and shown to have a lot of interest over the last 6 months. And so if there's any here that shows up in the 6 and the 3 and the 2 and the 1 and the 1 week and the 1 day, then I know that there is a lot of interest and there's a lot of continued interest inside of that sector. And if I just scan real fast, even if I only look at the top 5, not even at the top 10, what I see here, number 5 here is lithium, number 1 here is lithium, number 1 here is lithium, number 2 here is lithium, number 3 here is lithium, and number 3 here is lithium. Lithium is in all 6. And from a quick eyeball scan, I don't see any other ones that are in all 6. XME comes close, URA comes close, so lithium, why not? So let's just go in that hot, really super hot sector and just narrow our search in there for now, unless we can't find any great opportunities because everything has just run so much. Thoughts on current upside regarding Bitcoin? Very good. I'll say it. Bitcoin is looking very. Thank you for that. I should have looked at Bitcoin as well during my broad sector stuff. So it's looking very good. It's been chopping sideways. It's just maybe slight downward slope, but you can see that this low here is higher than that low. That's great. We're starting to break above the MA90 and the MA50. That is great. If we can match or go above this high right here, then we will start to have what is the beginning of a change of trend. Okay, so we went up, then sideways, and then, okay, if we can break above, then that'll be a change of trend. So we'll see. So it's starting to look good though. Starting to look good. I'm optimistic about Bitcoin and cryptos going into the end of the year. Okay, so and then we should use like BTC USD divided by gold. So Bitcoin was losing ground to gold, but it looks like it might bounce and might start to recover. Okay. Okay, so lithium is what I've determined that I want to narrow my focus on. Okay, so what have we developed so far in our trading plan? Overall markets are very bullish. There is no really compelling pressures to the downside, maybe not a lot of tailwinds to the upside either. However, the tailwinds that we do have are that the overall markets are still very bullish and the bond markets are starting to get very bullish as well. And we may or may not have the help of the Fed cutting rates, but the current expectation is that we'll get another 2 rate cuts by the end of the year. If that happens, that is stimulatory for stocks. And one of the hottest sectors right now is lithium. And so far we've formed that basis inside of our trade idea. So I'm going to go over to lithium. And I'm going to look at that ETF and see what holdings are in it. Not a lot. There's ALB, SQM, Tesla, ENS, Lucid. Let me type these out because I'm going to put them into a watch list. So I've got ALB, SQM, Tesla, ENS. These are also, but they're non-American. When you see the dot whatever, that thing after the whatever is the exchange. I don't know what AX is. I'm not too familiar with non-US exchanges. All I know is that it's a different exchange. Okay, so that's why I'm not looking at the ones with a .AX or .whatever in front of it or after it. LCID, Lucid. So it looks like we got a couple of EVs in there mixed in. SGML. And that is it. All right, so very few. 1, 2, 3, 6. There's only 6 to look at. Okay, so there's only 6 to look at. I don't need to bother looking over here. I can just pull up their charts and say, does it look good to me? So I've got Albemarle is looking very good. All right, so broke above its MA200. It went up, it broke back down, bounced off of its MA50, came up to the same level, bounced off of its MA200, came up to the same level, pulled back just below its MA200 and MA50, bounced above that, then it came back to this same level. Today it tried to break out, but it kind of ended at the same level. And that is looking a lot like what I told you guys was the institutional accumulation pattern, where we have many retests of the same level, and then finally a breakout that it's not quite picture perfect. Picture perfect would be this low would be lower than that low. Okay, that would be picture perfect, but it's close. It's close. And so this is looking very good. So if this can bounce off of where it closed today or at this horizontal level that I drew, this is looking very good. It could be very bullish, and Albemarle is the top holding in the lithium ETF, is the very first one listed. And I don't remember, or I didn't look at what percentage it represented of that ETF, but in any case, it is the top holding. So that is very bullish for Albemarle. Okay, 7.8% of the of, of the holdings. Okay, so Albemarle is looking very good. I could stop right there, but I'm going to look at all of them. SQM, even stronger. Okay, so we broke out here, failed, came back up, broke back out, tried, kind of failed, but bounced at the quarter date VWAP and the EMA 20 right there, went right back up, failed it again, and then went back up, gap up, consolidation, pull back to the MA 50. Now it's starting to go up. We've got earnings in November, looks like, but SQM is looking very good as well. But I prefer Albemarle just because we have that institutional accumulation in Albemarle, or potential accumulation. It's looking like it's beginning to look like some large institution is accumulating Albemarle. And this one pulled back to MA50. This is good. It's just so wicky. And I prefer, it's okay for a swing trade, but if I have something clean like Albemarle, then I'm going to prefer that over something that's really wicky. Okay, let's take a look at Tesla. I've already publicly given my opinion on Tesla. 450, which it tagged today, but I think it can stay there for a while, at least for a week or two. And then after October 17th, then it could run up to 500 and then maybe higher. But I already have a trade on, and I already publicly gave a trade for Tesla, so I'm not going to focus on Tesla today. ENS, beautiful uptrend. It no problems breaking. Well, so it tested that MA50, pulled back, then bounced and broke out and never looked back since. Never even came and retested. All it did was sort of chop sideways and bounce off of that EMA 8, off of the EMA 20. Just following that EMA 8 2 days ago on Thursday, bounce off the EMA 8. This is looking great. ENS is excellent. And I like that it broke above this resistance right here. It looks like we might have a baby little bit of resistance where it is right now. ENS is looking excellent. So far we have Albemarle, ENS. If I was only going to choose one, ENS is looking great. I would choose ENS. Lucid hitting its MA200. Maybe it'll break out, maybe it won't. Not nearly as compelling as ENS or Albemarle. So I would skip that one. SGML, same thing, except not as strong. So like I said, Albemarle is great. I would want to see that confirmation bounce, but ENS is pretty much ready to go. Maybe I would try to get in closer to that EMA 8, but this is not bad at all. So I'm really liking ENS. Okay, why would I not go into Albemarle and ENS? Because I don't want too much portfolio correlation. So obviously they're both lithium stocks, or one, Albemarle is much more than just lithium, but still they're in the same space. So we don't want too much correlation, and I can check portfolio correlation with StockFetcher. They make it easy. So all I need to do is check ENS and Albemarle. Okay, so Albemarle and ENS over the last 30 days, ENS has really highly correlated with the S&P 500, highly correlated with the QQQ, but almost no correlation with Albemarle, which is really interesting. Really, really interesting because they are in the exact same space. So although over here, StockFetcher is identifying one as basic materials, one's industrial products. So that means I should go and take a look at ENS's business model because maybe I can take both of these. So maybe, because I know that Albemarle is mining these materials and creating compounds out of them. So what is EnerSys doing? If they're doing something completely different, then maybe we can go into both. Manufacturing, marketing, and distributing of industrial batteries. Develops battery chargers and accessories, power equipment, outdoor cabinet enclosures. Interesting. So it looks like maybe Albemarle would be a supplier of EnerSys. Specialty chemicals, highly engineered specialty chemicals. Yeah, so it looks like they would produce the things that would go into the batteries that ENS would use. Interesting. Okay, well, in any case, I'll only go into one of them. There's no need to develop a plan on both. So I'll develop the plan on ENS, and as homework or as practice or for fun, you can develop the plan on Albemarle. But up until now, it's the exact same thesis. So I have the exact same trade idea. Lithium has been a strong sector, and I expect it to continue to be a strong sector. Therefore, I want to go long positions in key companies in lithium. So basically, it's the same trade idea. And now we have two different stocks that we can potentially take advantage of the same trade idea. So that entire trade idea portion, they share the exact same thing. The only difference is that the specifics of their technicals. ENS is just a straight up beautiful trend bouncing off of the EMA 8, whereas Albemarle was that potential accumulation by institutions and a pullback and retest at the MA 200 a couple of times. So one is a breakout, one is a trend continuation. A higher probability trade would be the continuation, and the higher profit potential trade would be the breakout. So I'm going to focus on the higher win probability trade, and if you guys want to do it on your own as practice, you can work on the breakout trade. So timing is now. All right, timing is either now or pull back to the EMA 8, which could happen basically tomorrow, potentially. So we decide, do we want to wait for that, or do we want to just say, hey, this is close enough to the EMA 8, this pulled back some today, so maybe that's good enough. And let's see what you guys are thinking. TE and LAC, are those lithium? I know LAC, TE. T is a penny stock, so we could, and this is looking very similar, where except the trend wasn't a straight trend, it was a up, pull back to the EMA 20, bounce. Now is not a great entry timing point for TE. So same trade idea, not the perfect timing. And so this would go on a watch list. Okay. LAC was, Alex and I talked about this one on Profit Panel on Thursday, and we gave a trade idea, say, hey, if this keeps on going up, like, because there was news that the US government was going to start accumulating shares. And so we gave a quick little trade as a potential trade, and it looks like we would have stopped out today. So you could wait if you're still interested in LAC. I would wait to see if it bounces off of that EMA 8 or that EMA 20. But right now, LAC is not interesting to me because it didn't continue its movement upwards, and it broke back down. So it's probably at the very least going to go back to its EMA 8. Okay. But thank you for pointing those out. So we'll go back to our ENS. Okay. So we determined the trade idea, we determined the timing, which is now, and now we just want to figure out how we want to execute. So we can either just go with pure risk reward, or we could try to determine a target. And our only clue right here technically is this right up here, which is not too far away. But if we got on an EMA 8 bounce up to that, you know, that could already be a 30-40% in a couple of days. But I would want to target something a little bit higher than that. So I'll probably go with a reward risk ratio trade. And then we could also check the gamma pocket to help us determine a target. See if it has any gamma pockets. Right there at 115. Yeah, everything else is below it, so it would act as support. So 115, what did I mark on my chart? 113. Okay. So 115, not bad. I could use that. Okay, so I'll note that there's a gamma pocket there. We also have a gamma pocket as support at 110. But great. This looks like a super easy one to set up, especially if it pulls back right to that gamma pocket. That would be a super clean, super easy trade. But I'm going to assume that we're not going to wait for that. Okay, we're going to jump in right at the open tomorrow if it opens right where it closes. Now that could mean that it goes down against us for a little while and then goes up. And so we want to be aware of that when we're setting a stop loss. Okay. So the only reason I'm choosing to do that, if I was actually going to trade it, I would choose right there. I would choose just above the gamma pocket, pretty much right at the EMA 8, and I would look for a confirmation bounce off of it intraday. Okay. So this is where I put it in a normal trade, but because we're doing everything after hours and we can't really look or wait for that, and I won't be around to look at it with you guys, I'm going to set it up a little bit differently. And I could also just say, hey, just set the target at the bounce at the EMA 8 and assume the bounce. So take a little bit more risk and assume the bounce. I could do that also, but again, I won't be around. So I'm just going to show you that there's many different ways to express, and there's a little bit less patient and a little bit more patient, and you'll get better odds and better win rates if you are more patient. But if you're not patient, then you could just go in right there, okay? And we can still make really great trades out of that. And how we would do it, if we just entered right there, right where we closed tomorrow, then how would we set that up? We know there's a gamma pocket right here, so we could use that as our stop loss. We have the EMA 8 right there, very close, similar level. Might as well give ourselves a little bit more wiggle room and go down to that gamma pocket. And of course, we know that sometimes things kind of dip below and then bounce back up. And so we could even be a little bit more generous and go to the low of this bar right here, okay? Or maybe a few pennies beyond it, okay? So by the time I do that, I take a look and I say that's 1.72 points away. So maybe I'll make it a nice round 1.75. And then I see, well, the ATR is 236. And that is less than one ATR away, which means that there is potential for me to get whipped around and stopped out just due to randomness. However, in this particular case, because I have both the EMA 8 and the gamma pocket right there, I'm going to be less concerned about that, because that gamma pocket should act as a pretty strong support. So if it goes down beyond that gamma pocket, then it's probably broken anyways. It's probably just going to keep on going down. It's not going to randomly go beyond that gamma pocket. It's actually going to break the gamma pocket if it continues lower. So because I have that gamma pocket there, I can be a little bit more comfortable to say, hey, I'm probably not going to get whipped out of this randomly, okay? And then I can set my target right at the gamma pocket. That gives me a nice 2.19 to 1 reward risk ratio, excellent. Or I could try to say, is there somewhere in between? Okay, so if I go 1.5 to 1, that's a little above this high right here. That's 113.76. Okay, and I drew my original line of resistance or at target at like 113, a little over 113 or 113 and a half. So that could be more in line with that. But again, I'm going to utilize that gamma pocket. I'm just going to do that right there. And that would be a nice, a little bit over 2.1, 2.18 to 1 reward risk ratio. And let's just say profit level 14.95. Sure, a few pennies below 115. Nothing wrong with that. Okay. Perhaps a 110, 115 debit spread. We could consider it. We'll take a look at that in just a moment. Okay. So why would I choose well, so I'm going to set this first, and then I'll decide if it's going to be a call or a debit spread. So there's a couple of things that I want to consider here. Number one, if I'm going to consider, the number one thing I should consider is how fast I think it could go to my target level. And we have a gamma pocket right at 115. Oh, so I should just set this to 115 because of that gamma pocket, or just below it. We don't always hit the gamma pocket exactly. Sometimes we come. All right, I'll just leave it where it is. Okay. Hey, Kevin, good to see you. And then when we take a look at the speed, the faster we think it can hit the target, then the more likely I am going to choose a single option, just a straight up call. And the faster that we think that we can hit that, the more likely I am to choose a shorter expiration. And the faster that we think that we can hit it, the more likely it is that I can choose safely a closer to the money option. Some people go out of the money, but like I showed you guys on Thursday, that's going to completely destroy your reward risk ratios. Okay, so that's not something I want to do. So now, even if I think it could go there quickly, or I think it could go slowly, or not like super fast, just like a normal speed, I could consider a debit spread. But one very important factor in debit spreads, or any type of spread, is the amount of time that we're going to put on and the distance between the strikes. Okay, so this one has $5 distance between the strikes. So if we do the suggested spread, the 110, 115, it's got to move $5 between spreads, or in our case, it's got to move $3.85 in order for this spread to go in the money. Or in other words, in order for the spread to make maximum gain. Okay. Now, my gamma pocket is right at 115. So basically, my expectation is that, hey, it's going to hit 115. Not that it's going to go up and exceed 115, which means that the entire life of the trade, until it hits 115, it's going to be outside of the maximum gain zone, which is rough, okay? Which means like my entire expected hold time, I'm going to expect this thing to not be in my maximum gain zone, which means I shouldn't expect maximum gain. Because for me to get maximum gain, I've got to hit that strike, and it's got to be done at the expiration. So it's got to be at or above that by expiration. So if we get to 14.95 and not 115, then I still don't get maximum gain. And so that's rough. That's really rough it's hard to, what that means is I shouldn't hold this debit spread to expiration if that is the case. Right? If I had a 110, 115 and I thought it could go to 130 by expiration, then that's great, because I should be able to hit my maximum gain zone relatively quickly and then start building a cushion And so, so that I have a higher chance of landing in and staying in that maximum gain zone all the way up to expiration. And I'm going to collect more and more profit into expiration. Okay. So I have to be aware that if I choose to do this one, the spreads are so far apart that I need to, I'm most likely going to, once it hits 115 or it gets close, I'm most likely just going to close out the position, and I'm never going to expect to make maximum gain on this trade, which means I need to figure that in to my reward risk ratio, because the possibility of me hitting that maximum reward is very, 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 very little. So I can't just use my straight normal calculation of maximum gain versus maximum loss as my reward risk. Okay, does that make sense? Any questions about that? So we could try maybe 105, 110, but then our profit potential is a lot less, right? Because both of them are already in the money. But because the distance between the strikes is pretty wide, that means it's got a pretty far way to go before I could hit my max loss zone. So even if I take a loss on this trade, it is extremely unlikely for it to be 100% loss. So that could, on the flip side, that could be kind of comforting. So the argument for having the wide strikes versus the argument against, which is, hey, I'm never really going to make max gain, and I'm going to be flip-flopping a lot, fluctuating a lot because I'm not in that max gain zone. I'm going to watch my premium flop back and forth quite a bit. The other thing to consider is these things aren't very liquid. Look at this one right here, that 110. It's like $2.40, $3.40 wide bid-ask spread. That's crazy. Okay, so if I manage to get into this spread, what's going to happen is that every day I'm going to watch my P&L swing back and forth and back and forth and back and forth if I'm looking at my broker's reported P&L. And if I'm not looking at my broker's reported P&L, then I can only go by the zones. Am I inside the max gain zone or max loss zone or somewhere in between? And like I said, with this particular one, with the strikes so far apart, you're going to be somewhere in between probably for the entire trade. And it's going to make it very difficult for you to estimate the actual profit inside of your trade. So for those reasons, I'm not going to do a debit spread on this, but this thing is so illiquid, I don't think I could even do a single option on it. Out to October, out to November, yeah. So unfortunately, ENS is not a good pick for us unless we choose to express it as an equity, in which case we're basically done. Buy here, exit here if you stop, exit here if you hit the profit, and then since it's an equity, the time frame doesn't matter nearly as much, but for the sake of the efficiency of your money, you can say, well, if this doesn't happen, how far away is this? This is 3.81. That's about 1.5 ATRs away. It should happen on average in a week. Maybe I'll give it 2 weeks, because if it doesn't happen within 2 weeks, then there's probably better places where I can put my money where I could make money much faster than just waiting around for this thing poking around. Okay, so ENS, the trading plan is, if we want to trade this, we got to go with the equity. The options just aren't liquid enough. The bid ask is just way, way, way too wide, whether it's for a debit or credit spread or a single option, doesn't matter. Okay, so since we're not able to find an option for that, I might as well take a look at Albemarle as well. Let's see, okay, it didn't look like anyone typed in any questions. Okay, so Albemarle, let's just say, again, I'm going to assume that we're not going to be looking at this together when the markets are open. And so I could make the assumption now, just jump the gun a little bit early, and just say, hey, we'll just go in right now because it is it just came down and hit that horizontal line, I'm just going to assume it's going to bounce. Okay, so we could go long right here. Okay. Now, normally I like the ones where the lows are higher and higher because it gives us a really easy way to get a really good reward risk ratio trade. Here it's a lot tougher because if I go all the way down here, that's way too far. And if I want to get a good, like a 2-to-1 reward risk ratio, then it's got to be way, way, way up here. Okay, and that's a really long hold time, okay, and a lower probability. So I'm not going to use that as my risk. What I'm going to do is I'm going to see where is one ATR, and I'm going to just see where that ends up being, okay? So that's about 4.5 for a single ATR. And that's roughly right there. That's a little bit below the EMA 8, just above the EMA 20. So I'm going to pull that below the EMA 20. And we're so close to that MA 50, I might as well just make it the MA 50, okay? And by the time we trade down there, most likely that MA 50 would be floating up anyways. So this is the maximum, really, stop loss where I'd want to go. We could keep going all the way down to the MA 200, all the way down to where we originally had it drawn. But basically, we've cut it in half, okay? And this is just under 2 ATR, 1.7-ish ATR away. That's going to make it pretty difficult for it to get down here because we have all these moving averages and support areas in the way. And it's going to make it really hard for us. Like if we get stopped out of this, we know for sure it was not random. It's just some sort of news happened or people just didn't want to go into Albemarle anymore. This actually was not an institutional buying campaign. We were wrong about that. In any case, the premise of our entire trade is wrong and we want to be out of it. So this is a pretty good level to put our stop. If we just go for a 2-to-1, looks like it would be at about 103.9. And let me just see if there's any reason to believe that we would hit any resistance before we hit that target. And yeah, we might at around 95. Okay. 95 would bring it closer to a 1-to-1 reward risk ratio, right? Yeah, almost exactly 1-to-1. Well, let's see if there's a gamma pocket there at 95. And so while we wait for that, not really. Okay, so the major gamma pocket is up here at 100 and 105, which is good to know. That's great. So since we don't have a gamma pocket, so we said 100 and 105, and our target here we set at 103.39. I think I'm just going to adjust it down to 100. And see, that's a 1.59 to 1 reward risk ratio, which is still okay. Just not super, super lucrative. Although we are counting this on a break as a breakout, so it could just fly higher. But in any case, I would rather have a safer trade than a lucrative trade, or slightly more lucrative trade. So now that we've got this, I'm going to be aware that there is a gamma pocket right here at 95. And so we could stall out at 95. We could bounce back down and then bounce up. In other words, I probably need a little bit more time. So over here, our target is 1307. That's about 2.5, maybe more. Yeah, almost 3 ATRs away. So 3 ATRs, we would expect about a month. About a month. So, we just realized that this is a slower trade. And if it's going to take a month, then absolutely, I would prefer to be in a spread rather than in a single option. And if I'm going to be in a single option, then I've got to go deeper in the money. All right, I want less extrinsic value. And we explained all of that in the Wednesday, Thursday. So September 26th, September 25th, when we went over the exact steps of the trading plan, I went in detail as to why we would want to do that. So you could just go back and review, and if you need clarification as to why again. So here I'm going to go more for a debit spread. If we're going to go more for a debit spread, personally, I do some 1 month debit spreads, but not a lot. I like to go quicker. I'd rather go 1 week or 2 weeks on a debit spread, because the closer we get to expiration, the faster I collect profit. So if I go out a month, it's going to get a small profit. Even if the price movement is pretty good, it's still going to be small amounts of profit. And then in the last week or two, really 1 week, it's where I really start to see profits increase very quickly. So I'd rather cut that short and maybe just take this out to 2 weeks. So that would be 3rd, 12th, 13th. So maybe just to the 10th, okay? So I'm going to look for a debit spread out to the 10th on Albemarle. Okay, and I'd like to make a decent profit on this if we're right, because it could break out and go pretty fast. So we might as well go for straddle the at the money and in the money. So as the same strategy that was suggested for ENS, so the one that's just in the money and one that's just out the money. So I would buy this one and 86 and sell the 87. And notice how the strikes are much closer now. That's much easier to deal with. Okay. I can get in, looks like maybe just below 50 cents, which means I have just above a 1-to-1 reward risk ratio, which is great. Okay, so notice how the reward risk ratio that we did over here is no longer relevant. Why? Because we're just saying as long as this thing ends up above 87, okay, and it's basically just below it right now, which is why we get slightly better than 50 cents on this thing. But if all it needs to do is be anywhere above here, and then we can make that 100%, as long as it stays up there. Okay, so it's 50-50, because it's at least in the eyes of the market makers and pure mathematics and financial formulas, it's a 50% chance, because they don't understand trends, they don't understand psychology, they don't understand institutional behavior, they don't understand any of this stuff. All they know is that all they know is randomness. And the baseline assumption in every financial textbook is the markets are random. And so for it to go up or down from any point in where it is right now, that would, to them, is a 50% chance. And so I get a 1-to-1 reward risk ratio right exactly where the price is. Now we look for a lot of things that give us an edge and suggest to us that it is not a 50% chance, and the markets are not random, or at least we find pockets in which the markets are not random. So we take advantage of that. That's how we make our money. The financial models think that the market is random. We believe or know, in fact, that in many cases, the market is not random. And so if we find those cases where it's not random, but being priced as random, that's where we can make our money. And that's what we're going to do right here, okay? So Here I'm looking at a 87. That actually becomes my max gain level. Okay, and then I'm going to look at my max loss level. It is at 86. Why is there so many gaps in what? In Albemarle's price, like over here, all of this. That's just the way it trades, right? It's just the way it is. And I would say, yeah, it's a little more gappy than most, but it's not huge. Like they're not huge. Well, that one's kind of a big gap. That one's kind of a big gap. But they've been subject to also to a lot of kind of tariffs and whatnot. You see, it's not as gappy over here. There's some gaps. Still, always has been gappy, but recently it's been more gappy. But I'm not too concerned about that, right? As long as it actually breaks out, and especially if I'm doing a debit spread, right? I'll just understand that if I'm in my max gain zone and it's gappy, then I'm not as safe as if it was a non-gappy stock. So I would look and manage that very carefully, right? But good observation. Much clearer as to your choices and options. Oh, good. Excellent, Cfazio. Thanks for that feedback. I'm glad it's a lot clearer now. So over here, if I can get in at just say 50 cents. Okay, so I'm going to assume we get in at 50 cents. So that would be my break even out to October 10th, right? So that's the trade. Okay, so we're going to just see if it can bounce and continue upwards. And if we look at it right here, you would go, just all you saw was this. You go, Kane, that is kind of far from the moving averages, right? And so maybe you should wait for the pullback and then trade it when it pulls back. The answer is yeah, that's true. But we're not trading. That is not our trade idea. That is not our thesis. Our thesis is that it is breaking out of 87, the 87 level, which it, or 86 to 87 level, which it tested and tested and tested, and now is testing again, and actually intraday broke above but pulled back. And so we're going to treat this as a potential bounce with an institutional accumulation pattern that suggests maybe we've got institutions accumulating and are ready to allow it to break out. So that is our trade idea. If you tell me, Kane, you're so far away from the EMA 8 and the EMA 20, it's probably you're going to pull back and then you could go in at a bounce, then I say you're operating on a different trade idea. And you can trade that trade idea, but if you want to trade that trade idea, the timing is not now. I'm trading a different trade idea, one that gives me a 1-to-1 reward risk ratio on the debit spread. However, if I'm trading this breakout, my probability is not 50-50. It's the breakout is probably like 60-65%. So not super compelling, but if on the intraday pullback, if we get the bounce, then that is better, much better. Then we'll bump it up to about 70%. And that's the trade idea that I'm trading. Okay, I could be wrong. I could easily be wrong. That trade idea could prove tomorrow to be wrong. And if it proves tomorrow to be wrong and we start pulling back to the EMA 8 or the EMA 20 or the MA 50, then I'll just close the trade. That's my management, okay? So here's my management. Stop right there. I don't even know how to do this. Stop. Basically, I only have a stop, okay? I'm going to stop if it pulls back to the EMA 20 or even the EMA 8, okay? So if we close, let's just define it right now. If we close right there at 83, If we close there or below, close, not just trade, if we close at 83 or below before expiration, I'm out. Doesn't matter if it's tomorrow, same day that I get in. Then I would say, okay, I was wrong. This was a pullback, and I should wait for the bounce. I'm out. My trade idea was wrong. Okay, so we stop ourselves out, and then if it's not, if we don't stop ourselves out, if it does prove to either chop sideways or go up, then I'm just going to keep on hanging on until it looks like my trade idea might be wrong. Right? So if it's up here, there's no reason for me to think that my trade idea was wrong, unless I see some sort of market force putting a downward pressure, a sudden downward pressure, like, uh-oh, that this is going to end up being a failed breakout, in which case my trade idea is wrong again. And then I would close the trade at whatever profit or loss that I had at that particular point in time. Otherwise, we're right, and we're just going to hang on to this into expiration and collect our roughly 100% gain. Okay? So that's the management portion. So I'm actually going to trade this. I'll go ahead and put that in. I'll put it in at, let's see, I'll put it in over here. I'll just trade one. This is just an example. Okay, so this is not a trade recommendation. I can't give trade recommendations on outside my services. So this is just, hey, an example, I'm willing to put $48 on the line. Actually, I'm going to do one. I'm going to send in one at 48, and then I'm going to send in another one at 50. Okay. Just if it goes above 50, then forget about it. I'm not going to trade it. I want that at least 1-to-1 reward risk ratio. All right. So whether or not you follow along, that's up to you. This is not an official trade or any service, and you're technically on your own. It's your own decision, your own trade, if you choose to make that trade as well. Okay. All right. Any questions? Do you trade gold? I do trade gold, but not right now. Not after that. Okay. So I would wait for that to pull back to 345-ish is where I would be interested in gold again. Okay. So hopefully you guys got a clear picture on developing the entire trade idea, the entire timing, the execution, and the management plan. And you have another good example, well, maybe sort of two good examples under your belt, just that ENS didn't end up having options as its execution. Okay, I'm not really seeing anyone else type in or ask any questions. So, oh, great call, watching all the pieces coming here. Great, thank you. All right, so if this is helpful, again, thumbs up if you care to. That'd be awesome if you could do that, but no obligation, obviously. And I hope you guys have a great rest of your day, and I will see you guys tomorrow. All right, bye, everyone.